co-founder of the American Fintech Council and chairman of the board's Public Policy Committee at the American Fintech Council. The American Fintech Council, AFC, includes nearly 100 for-profit companies that invest in technology to deliver better financial services. We range from low-cost loan providers to online neobanks to automated compliance services firms. We wrote an op-ed on today's topic over the summer, and I'm going to expand on that op-ed here today. But first, let's just be very clear about what is happening here. This effort by old-style lenders, some of whom were just mentioned by JP, to destroy CFPB regulations is serious. But it's not serious business, it's anti-business. If successful, it will derail investment and innovation, it will harm the economy, and it will advantage companies who are not serious about creating products that are good for consumers. You don't have to agree with every single CFPB regulation to understand that the regulations have improved regulatory certainty, which has empowered economic creation in this country. Case on point, the very payday lending rule under challenge in this Supreme Court case. The regulation defines nationwide for the first time what payday loans are and what high cost loans are. As a result, an entire industry of fintech lenders was born with more clarity to know how to structure a product that is not payday, that is not high cost, thereby reducing regulatory risk across federal and state agencies for these new entrants. As the first federal law drawing this line for all consumers, not just the military, all consumers, dozens of new companies have been able to lower the cost of credit for Americans. Borrowers have saved billions of dollars, billions B, and have obtained responsible credit to invest in their future, where they might have instead received some tricky product that harmed their future. But the stakes of this case go way, way beyond this particular CFPB regulation, as others have alluded to. Any legal logic that strikes down this payday regulation would scarily essentially imply striking down all CFPB issued regulations. Three main points here. There are many, but let's focus on three. One, the mortgage markets would be just decimated if CFPB mortgage regulations were struck down, perhaps as bad as what we saw in the global financial crisis 15 years ago that Amias alluded to. No responsible mortgage lender in AFC or otherwise wants a return to the lawless days when predatory products infected the economy and affected the American homeowner who became underwater on loans they did not understand. Rather, responsible lenders want the regulatory stability that recent CFPB regulations have provided, from guiding proper product structure to requiring licensing of mortgage originators. But beyond mortgages, secondly, going to the entire lending markets, without CFPB issuances, we'd go back several years in time to not knowing if artificial intelligence algorithms, for example, are covered by laws that prevent discrimination in lending. AI and machine learning algorithms are clearly covered today due to CFPB guidance at members of industry's request. So industry now has more regulatory clarity to invest in these algorithms to provide more affordable financial products, which we don't really want to lose. Third, and worst of all, now let's go way back in time. Let's remember that Dodd-Frank caused the CFPB to reissue many consumer regulations. Many of these go back to the 1970s. So these rules are now in some jeopardy too. These rules include the nation's first data privacy protections and even regulations governing fee transparency in personal savings accounts. We're now in the 21st century. Drones are fighting wars. Private companies are sending private citizens to outer space. But the Supreme Court is being asked to send us back to a regulatory environment that existed before personal computers and ATMs. The reality is that for capitalism to work, there just have to be common rules that we all adhere to. At a bare minimum, we need rules that empower customers to make informed choices so markets can work and then the best products can win. The winners of a world with no rules are companies that create fraudulent products, predatory products, that take advantage of seniors or the financially vulnerable. Those companies can declare bankruptcy, can change their names when their schemes are discovered after short-term profits are made. But companies that want to build technologies that actually help people in the long run are going to end up going down with the very regulations that are in question here. So let's pray that the Supreme Court does not throw this all away.